Okay, we have just started recording. So what it also reminds me is once it's recorded, it is already going into soft form. So please refrain from uh, or please be sensible about giving any personal information or anything. Rest assured, we are not going to publish this anywhere, but at least make sure that you who are participating, make sure your own data privacy is taken care, right? Since it's recorded, I don't know, it is recorded in a public Zoom, and we may put these in our group for sharing or whatever. So please maintain your own personal privacy in sharing whatever the information you have. All right. With these, let me go to something like icebreaker. Okay. So I'm sharing my screen. Just give me a moment. Okay. I have this wholeev.com Sivakumar THI 401. Uh, Probably I'll put this in the chat box. You can go there. I just put that in the chat box. You can go there and respond to this from where you are attending. Are you able to access the link? Can you give me feedback?
Yeah, able to get in.
Okay, good. So you can respond to by clicking the location where you are dialing from. It is just to.
I responded, but it did not come here, right?
Oh, it doesn't come. Okay. That is why initially I said disclaimer. Nobody is professional. This is also a training ground for me.
Yeah. But other people also not coming, right?
Yeah. I think it is not. The page is not refreshed, I think. Okay.
Okay.
Okay. I think now we should be able to see that. All right. I hope now you can see that.
Yeah, can see.
Okay. The presenter is from Canada, and most of the people are in this region.
Singapore, Malaysia. Yeah. But
I,
where are the Dubai people? This is like quite a holiday for them, I think, right?
yeah. Okay, there is a suggestion in the chat box. Except speaker, others can switch off the video. This will improve the audio quality. Okay, that's a good suggestion. And yeah, I see that Dubai people have also dialed into this call.
Okay, good. Yeah, no problem. I think some people might have put India as there.
Maybe. I see two people from Gulf region.
I'm not successful, Siva, but a bit struggling there actually. So it went to full EV, but it is not. I don't know what's
Yeah,
happening
now
there.
it,
Yeah.
yeah, now it's showing. Yeah,
Okay.
great.
Anyway, okay, I think that's fine. At least to get a idea of from where people are dialing, right?
Okay.
So let's say we go to the next one. Is your whole EV page getting updated on this?
Yeah. How do you feel today? That's what
Yeah,
the
that's
question.
right.
Okay. Okay.
But on the screen, if you touch, will it be respond?
Yeah, yeah. If it is a mobile,
Yeah.
you can touch it. Yeah, you
Just
can
touch
just
it, and then I
yeah
think
touch
it's
it.
saying that response recorded. So I need to wait for another next question, right, Siva?
Yeah, that's right. That's right.
Okay. Okay.
It will be just as soon as you touch it, it will be updated, and you have to wait for the next one. Okay. All right. Most of them on the right side of the response. That's good. Okay. The next one is open for you to put your questions or vote or whatever. Hmm. Priya Bharati Pothiraj. Any idea who is that?
It's my friend I have suggested.
Who, Murali?
No, Vivek.
Oh, Vivek. Ah, okay. Okay, Vivek. I'll allow them. I just want to make sure that we have only known people inside. Okay. So this question, right? You can type your questions. You should be able to write your type your questions in the enter a response column, and you can also vote if you want vote for existing questions. All right. So this page will be left open for you to type questions throughout the session. Where whenever you feel that you want to have some questions here, you can have it. With this, uh, I'll just stop sharing my screen and let Manish to take over.
Okay.
Okay. Yeah, Manish, all yours. You can start, and if anyone have any questions, you can probably raise your hands, or we can put in the poll EV. You can
Okay.
periodically do it. And this is planned to have to be for 1.5 hours, and
And then half an hour
half an hour
question, I
for
guess.
specifically for question and answers.
Questions. Yeah.
Yeah.
So I think it is okay. First of all, thank you everybody for taking time and listening to us, and let's have it as a more of an interactive session. And I think I have a lot of things to cover, so there may be some places where I may race through, but I would say that let's do one thing, that when I'm speaking on particular slide, if there is a question, just unmute and ask there, and then we can move. So let's say if there are some slides left, we can have some session another day and complete it. Or anyway, I plan to share these slides so you can go through them, and anytime you can call me and ask me any questions about those slides. Okay, so without delaying, let's start. What it do? So you are able to see the slide. Okay, so here it is showing a little bit different for me. Okay, so yeah, this is my disclaimer, and I think this was covered by Shiva already. That
Sorry,
I'm
Manish,
yeah.
I
Hello.
can see only the first screen, the title screen. Probably you had to put in slideshow and
Oh, you are still okay. What you can see now?
the first screen only, the financial freedom title screen. Probably you are not sharing the slide the screen which you are sharing.
Mm, yeah, it is like it says you are sharing. Just one second. Let me do one thing. Let me share the screen, full screen, and see how does it work. Oh, I think it divided in my thing in two screens itself.
Okay.
What you are seeing right now?
Yeah, it is showing both your two screens basically. Your next
Oh,
slide and present slide, including the
okay.
notes page. So
So
probably click the
uh,
display settings. Probably you can find some setting there.
where within Zoom display settings?
In the same window
Uh,
to your left, display settings. You are on the next one. No, no, on the top menu itself, show taskbar, display setting, end slideshow, right? So display settings.
I'm not able to see that. The top bar has this participant chat, new share. You're talking about that?
No, no, I'm talking about the PowerPoint menu itself. Yeah, display settings. Yeah, just above that. You can't see that?
No, I cannot see that. Okay.
Okay.
So here I have annotation, see all
In
slides,
the top,
Zoom.
in the top, Manish sir, in the top of the screen, you can see there is an option called
Or
Show
display
Yeah.
Taskbar.
setting. Okay.
Yes.
So swap presentation view and slide view and duplicate slide view.
Yeah. You can try duplicate slideshow. You try one of them.
Okay.
Yeah. Now we
Now,
can see. Yeah. That's right.
okay, good. Thank you. Thank you very much. Yeah, I'm new to
Perfect.
Zoom. I use most of the time Microsoft Teams.
Okay.
Okay. So this is the disclaimer that basically I'm no expert and neither a registered advisor, and it is just trying to share my learning experience from my investing career. And please consult your advisor before making any investment decision. And anyway, I'm trying to refrain from giving any stock recommendations. And even if we talk about any stocks, it would be only for learning purpose. So what is the agenda? So today agenda is what is financial freedom? What does it mean to me? And why is this important to me or you? And how to achieve financial freedom, investment targets and strategies, different ways of investing, mythbusters of a stock market, and key things to consider while you are investing in the stock market. And how do I search my stock is very brief. I think it itself is a big subject. We can talk about it later, and then Q&A. So what is financial freedom? So can somebody like say if they have any view on financial freedom?
Maybe the simple term, I would say that I don't need to work anymore.
Okay, so yeah, retirement. Okay, that makes sense. Yes. Anybody else?
Not financially overburdened.
Wonderful. Yeah, so it is on similar lines. So there is a lot of like I see that a lot most of the people think is as a retirement. And so here, like what I feel that the answer is maybe, in my view, because it doesn't mean really retirement. If you are financially freedom, if you achieve financial freedom, it doesn't mean like, oh, I will go to a beach and just will be lying down there for my whole day and then come back and sleep at night, right? It doesn't mean that. So it may happen that probably you may be working even more, but what does it mean that money going out of the equation? That's what it means only. So living life at your own terms. So that is what I call financial freedom. I am financially free if I'm living life at my own terms. Of course, like it is only from the work perspective, not at the home or in my relationships, but like for my when I go and show up on my work, right? So then living life on my own terms, and I decide on who with whom how I want to deal with, and for how much and how long I want to deal with. So that is what, like, and I don't have to show up at work for my livelihood. So if I don't have to show up for my work for my livelihood, so imagine what can make difference it can make to you. So it is getting a kind of security for you, isn't it? Right? And when we are at workplace, you can imagine that is like, we can think it is, oh, just 8 hours, but actually it's 1/3 of our life, right? And how we feel at that, we bring it home, so it becomes maybe more than half. And there are some people who cannot even sleep in night, right? So it can becomes almost whole day for them, so it becomes 100% of their life, right? So that's getting the security in the workplace is very important. It is, in my view, it is very important. But for some people it is more, some people it is less. It depends on how people thinking is, right? So that is where, like, I started my journey, because I felt that I need financial freedom. A lot of people don't feel that they need financial freedom, right? Because let's say if somebody is enjoying his work so much that he is okay, and then he has sufficient money from his grandfather, for him it is like no big deal, right? So the bottom line is, money going out of equation is important for some people, and those people want to strive to achieve that. And what is the result can be retirement, means, or can be going working for yourself, or can be working for some NGO, or can be volunteering for something, or can be going to some spiritual organization and just follow the light, right? It can be anything. So now I think next question is like, importance of financial freedom for you. So I would need like couple of volunteer to have some other so this was like my perspective. Now from others perspective, like, why you think financial freedom is important to you? Can some people can say? So we get some more aspects on this.
We can plan our future accordingly.
Can plan our future accordingly. Yeah, that's true. So like, if you like in like you want to, let's say you want to settle in India, you just go and settle in India, or you want to settle in some other country, and then because of job you cannot do, so you can do that. Does that mean that?
Yes.
Got it. Yeah, that makes sense. Anybody else? Yeah, at least one more person, I think should say something
So
about
Manish,
it. Yeah.
uh,
Hey, Sarah. Yeah.
so if your basic things are taken care, right? I mean, your survival is taken care. There
Yeah.
are so many things you can do. Like I mean, for at least for my sake, I could have thought about doing so many things, right? But I haven't tried because my basic things, I always felt that that was not covered. So once you mentally made up your mind that your basic things are covered, you can manage your time in such a way, right? You can work part time, or you can do whatever you need. You can follow your passion, or you can support whoever you wanted to do. There are so many things you can do.
Yeah, exactly. Yeah, so what I want to say, there is a higher objective to be achieved, right? And for that, if you are financially tied up, you cannot achieve, right? God may have made us for a bigger objective to achieve, but we are just like like the bullock of that what is the guy expeller they have, right? We are just running around just because of these some money we need for our livelihood. So getting out of that is very important, right? So some people can enjoy, or some people can think of retirement. Some people can say, okay, we have to achieve something else, right? So there are quite a few things which I always wanted to do. I always wanted to be entrepreneur, right? I wanted to have own business, but so much fear of basically failing and not able to bring food on the table was so much concern for me that you see that I am not able to achieve. At the same time, I was not able to do my job well also. So it's like, because when you are not financially free, a lot of people cannot speak up, right? Cannot speak. And where my job at my at my work is to basically give my views, but I'm saying, oh, probably this guy will not align, or probably that guy will not align, and I'm not saying that, so I'm not doing my job effectively too. So that is why it is very important, right? So now I think that most of the people understand how much important it is, right?
I think
And
Manish, Swarna
yeah.
here.
Hey, hi, Sorna.
I think the importance comes in life when you have financial uncertainties. If you are financially have freedom, at least it will help you to go through that, or it may not make you a lot of impact to you. To face financial uncertainties, it helps. Like all of a sudden a medical situation requiring a lot of finance. In such a situation, if you are having a financial freedom, it helps.
Yes. So in emergency situation also, financial freedom will play a big role, because if you have more money, you can cater for it. But yeah, it's like that is like it at that time. It will depend, like that is more of insurance kind of thing. So it can cover, but may not be fully. So it depending like how you set up your goal. So if emergency is the thing, then that has to be in your financial goal. Yeah. Thank you, Swarna. Yeah, for bringing that up. So how to achieve financial freedom? So in my view, only 4 steps. Understand yourself in the perspective of financial freedom. This is like single most, like it is almost a requirement to start for financial freedom. I will come back what it is. Maximize your savings. Okay. Work on financial goals and strategy. Then prepare what your financial goals or strategy is, and then invest wisely for long term to achieve financial goals, right? So you have to invest wisely. So number 4 is the one where people spend a lot of time and thought, and then the first 3, I think number 3 also some people spend some time, but I think that the first one is single most important. I think 50% is done there, and then I think then all the rest of the 3 are execution step. So understanding yourself, why it is so important. So what I have seen in my observation when I talk to a lot of people, I see some people have like even millions of dollars, but still they don't feel financially secure. They think, oh man, I don't know how much it will need. I don't know what is. So they, what if this happens? And what if like tomorrow the cost of housing goes up so much and it is not enough? What if like tomorrow my son needs this much money and I am not able to cater? So like these kind of things, if they are there, and then you are working towards financial freedom, what may happen that you may achieve financial freedom, but you may not achieve. So you may achieve your financial goals in the numbers, but actually you may not be able to sense financial freedom. So whole objective may be just gone. So it is just like we all are from chemical industry, I think, and then we do, like if there is a tank and the tank is basically overflowing, but that LIT is not telling that it is high level already, right? So that is where understanding ourselves is very important. The sense of insecurity has to get out of us. Sense of insecurity of ourselves, like if there is definitely there is some vulnerable thing comes, a sense of vulnerability is good, but insecurity, sometimes we put ourselves in that. I think we have to resolve that. So how do we know if we have sense of insecurity? So like if we are in our work and we have problem with delegating responsibility to our team, right? There is a sense of insecurity. Like I know a lot of people who want to delegate the work to other people, to their team, but they still keep on calling them, right? Keep looking for updates more often than needed, right? Feel worried seeing a call from your supervisor or your manager. As soon as you see, look, oh man, there is some insecurity. And always being overly worried about EMIs and commitments which are coming. A lot of people cannot sleep well when the EMIs are coming, even if they have money in their account, right? Overstaying in office and achieving minimum progress. So you would have seen that very much. A lot of people overstay in office until 7 o'clock, 8 o'clock, but you will see that work-wise, they don't achieve much. So they because of insecurity, they are doing that, right? And then what happens that they spend time, but the focus is somewhere else. Planning to leave office only after bosses leave, right? So if my job is done in 8 hours and I'm good, then I should be going, right? I should not be thinking, oh, my boss did not leave, right? So if the answer is yes to any of these, very likely you may have difficulty in achieving financial freedom. So it is not achieving financial freedom, it is getting the sense of it, right? And I can tell you that almost 10-12 years ago when I started that, I had all these problems except the first one. And first one I did not have because I did not have any direct reports to delegate anything. So actually I might have had all of it, right? And so,
Manish, a quick
yeah,
question.
yeah.
What if a person doesn't have any of this problem, still haven't achieved financial freedom? Is there something wrong with that person?
Yeah, so that is the deal. So then that means this first step is done for him, right? Then he has to go to second, third, fourth step, right?
Okay, got it.
So if he doesn't have this problem, then first step is done. But if you have this problem, then you have to do this first step, which means a lot. And so you may have difficulty in achieving financial freedom. And what is the solution? So because we are all Indians, and I would say resort to yoga, meditation, sadhana, vipassana, or anything equivalent. That is the most important thing, right? That is the most important. It is important for your life. It is important in personal life. It is important, good for your relationship. It is good for your health. It is good for, but it is almost prerequisite to achieve financial freedom. Otherwise, you can be a fund manager. It's not an issue. You can, but you still cannot achieve financial freedom because you will not get the sense of freedom, right? So in India, you have a lot of yoga gurus. In India, we are very lucky that there are a lot of options. Just choose one and see if it works. If within 1 year you can decide it is working for you or not, and if it is working, just don't leave it. Just stick to it. It is easier to find 1,000 bagger in the stock market, but not easier to find a guru. Okay, so just stick to it and practice it. Follow. Give 1 hour, 2 hours to yourself every day. So feeling liberated is the first step to financial freedom. We have to feel liberated. So for me, I started this spiritual journey first. And then I started, when I feeling liberated, a lot of things started improving. Not only what I execute in the financial freedom, but also on the work, on the relationship, on many other places. So I think first step is okay, everybody. So if there is any question, if not, then we move to the next step. It is more of execution, maximizing the savings. So I was very lucky in this, that I had a friend from my NUS days, and that guy really was always bashing me on this. And at that time, my salary was very low. And he used to say, hey, you should save 2/3 and right. And he so, because when you save 2/3, then only you can save half. But my salary was only $2,600 in Singapore in 2005. So it was very difficult for me, but like it got into my brain actually, and very early. So got very lucky. And sincerely, my view, in my experience, we should target to achieve 50% of our take home salary. Because if you target 50, you will achieve 30, right? So if you do 30% savings of your take home, I'm saying exclude the tax, exclude the provident fund, exclude those compulsory things. So whatever you are getting, I don't think your expenditure, you should try to be more than 50, right? And this is, of course, when I say 50, it is basically including your house. So it is very tough to achieve actually in initial part of your career. And key idea is basically do not try to compromise on what you need, but have a very strong check on what you want. Delayed gratification, right? So if you know what is delayed gratification is, like in Stanford University, I think they conducted an experiment in some kids, right? And what they did, that they took like multiple kids and put them in different room, and then they said that they gave a chocolate to the kid and told him, explain him, that if you eat the chocolate immediately, right, you will get you will not get anything else. But if you wait for 1 hour and eat the chocolate, then you will get 2 more, right? And this experiment they did, and what they found, the kids who waited for 1 hour and then got 2 chocolates, those kids did very well in their life, very well in their life, because they have an urge to sustain their gratification, to hold on their gratification, right? So everybody wants to have a lot of things, but one who can sacrifice those for their goals is going to be the winner, and that is very obvious thing, right? So some like very like tactical things which I can suggest here: buy house in the housing society one step lower to than what you can afford, right? Very obvious one. For example, if I am an engineer, let's say in Singapore, if most of the people from Singapore can understand, there is SGB and condo and then landed house. If I can afford a 5-bedroom SGB, I should go for 4-bedroom. When I can afford like a condo, I should be living in 5-bedroom or a little bit expensive, right? So it is generally like based on the salary, we know that where our peers are living, and then just go one step lower, because it is not only the housing cost, there are other costs also associated with the housing, which also go up if you live in expensive housing, right? If you live in condo, some of the condos have conservancy charges of $700 a month, right? And then there is car parking, there is this thing, that thing, right? Housing EMI is not recommended to be more than 30% of your cost, of your, let me see what I wrote here, of your salary, not more than 30%. So don't overburden there yourself. So which means you have only 20% for your expenditure, very tough to achieve. So that was I'm saying, you target 20, you probably do 40. So then effectively you save 30%. Refrain from buying depreciating assets or something which becomes expenditure easily. right? Like expensive clothes, jewelry. I forgot to write car. So refrain from buying car also, right? Depreciating asset, very depreciating. Always love to buy appreciating assets, right? Which you like, if you see there is a painting which is selling for $100 and you think in 10 years it can be $200, no harm, buy it, right? But car immediately gets out of the showroom, it loses 30% there itself, right? So, so and then like some people buy jewelry thinking they are spending, they are investing in gold. So just be careful, because if you don't sell it, is not a if it is not ready for sale anytime, it is not an investment, because then it is expenditure, then you are just buying the jewelry. Not having credit card helps also, right? You just pay from your debit card or from cash, or like whatever money you have in an account. It will give you a sense of basically that okay, if your month end is coming, if you don't have salary, money in your account, then it will give you a mental check in your mind, and it can help a lot of people. And for me, I am very much control on this, so I use credit card for sure. But some people, I think they don't have that level of control, so they don't have credit card, that helps. Okay, so those were like few tricks. And now moving to the next, so first step is make yourself feel liberated. Second is basically try to save as much as possible. And then like working on a strategy, what should be your target when you think you would be financially free, right? What should be the target? So in my view, when should I consider that I'm financially free? When the passive income from my investment exceeds the expenditure to run my home, then I would say that, okay, probably I am financially free. Appreciation of liquid assets far exceeds the employment income for considerable period of time. So let's say I have a stock and my portfolio appreciates by 100,000 for 3 years, and my salary is only 70,000, 80,000, let's say. For 3 years it is happening, then of course I understand probably I am achieving towards that side. So here there is trick in both, right? So in the first one, it is like if you are in a stock market, it is very difficult to achieve this, right? Because even if, let's say, because the dividend yields are very small, so it will take very long. You may have very big portfolio, but it's still like achieving only 2% dividend yield. So $1 million portfolio may be doing only 20,000, and that it doesn't meet that, right? Where in $1 million you may be free, financially free, right? Then the second thing is, in this one there is another issue, that suddenly, let's say that like in COVID, right, some people lost their job and they have to settle for lower salary. Then it may seem that you are achieving this goal very quickly, right? So in my view, I would say that we should go for both. So have a little harder, just make sure that you are there, right? For example, if my rental from what is the example to see that you have achieved the goal? If I have 2 rental properties, and if the free cash flow from these properties meet my expense need, I can consider myself financial free, right? So it is obvious, right? Because if let's say that your job is no longer there, and then your rental you are getting $10,000 rental, and then your expenditure is only $6,000-7,000. Yeah, it is done, right? If my dividend received from my stocks is higher than my expenses, again same thing, right? If you are getting dividend of $100,000 and your expenditure is only $70,000 in a year, yeah, good. That is the kind of target. It means this is like my own targets. You can set your target, and if let's say that like Swarna said that, okay, so what if there are medical issues or what if this thing, and build those into target. Okay, so I have to have this much corpus at least, just build one more, like it is maybe both, and then you can add one more, that additional $1 million for my medical issues. Okay, additional $500,000 for my son's education or my daughter's marriage, right? And then you can say I have to achieve all four, right? That kind of thing we can do. Why this ribbon is not going off? Okay, so here it was written.
What is that,
Avenue.
Manish? You
Why
have
this ribbon is not going off?
probably it is just your screen. You can just pull and put it one side.
Oh, I can put it one side.
Yeah, we don't see any ribbon here.
Oh, I don't see, you don't see ribbon,
Yeah,
ribbon?
yeah.
Okay, so that's good then. So avenues to achieve financial freedom. So there are many ways to nirvana, right? So here, like here is, there is a lot of discussion. Okay, this thing works for me, this thing doesn't work for me. And I'm here like not to support one particular thing, but I can give you what are the tricks, or what is the like pitfalls there, or what are the traps possible, right? So so in my view, the biggest way to achieve financial freedom can be is invest in yourself. So be yourself multi skills, right? And be healthy most of the time. So if you have like multiple skills, then what happens if something is wrong with your job, you can go for another job. You will never feel that you're not financially free, because you have something, and some more that you can find your passion and follow the passion, then that job is more secure, you're enjoying, also it is giving you more money also, right? So that is very obvious. And even Warren Buffett says that if you have a choice to invest money versus investing yourself, do the first one, invest in yourself. So you can go for education, or in my view, the best way in investing yourself is learning soft skills, making good relationship, um, trying to find trustworthy people and making good relationship with them. That is what I would say in investing, instead of going for some degrees and some qualifications and some certifications. Okay, have a successful business is also a way to achieve financial freedom, but does it really qualify? What is the catch here? In my view, it can definitely give you financial freedom, but there is the word of freedom which is there. I think it's difficult to achieve, because when you run your business on your own, then you have a lot of commitments, right? If I have a, let's say, McDonald, I've opened a McDonald, I have to go there in the morning and see everything is running fine. I have customer to deal with, I have to take care of their complaints. So I may not have the freedom. So if you want to have a successful business, do it passively, and then that, in my view, would qualify financial freedom. So instead of having McDonald's, fund a McDonald's and get revenue from it, and then you can think, okay, I am getting money, and as well as I am free from the commitments. Real estate investment is by far much more reliable and much more used, and I would say very superior way of achieving financial freedom. Commodities. So there are commodities you can invest, so you can trade in them, not trade in them, you can buy them and sell them and hold them. So that is also a way to make a lot of money, but I think it is not for retail investors. It is generally a much bigger game than you can think of. So, and I also do not know much about it, so it's better not to, like, I can't say much here. Forex, crypto, I totally do not know. I'm totally zero experience on that, so I would skip that. Then comes equities, by far more popular and more discussed, and a lot of books on it. You can have all kind of views on this, and within that you have ETFs, mutual fund, stocks, everything. And then fixed deposit, bond, bills, etc. Okay, so these are fixed deposits, bonds, and all these are not the most superior way to achieve financial freedom, but sometimes they are needed. Okay.
Manish, sorry, a
Yeah.
quick question. What do you think about Ponzi schemes? There are a lot of successful Ponzi schemes available. I just give the coordinators just let's say 50K initially. They'll pay me 5K every month. So they are successful in running. At least I know people who have really uh, crossed their break even. That means they've already taken more than 100% of what they've invested. So they call it success. And what do you think about it?
Yeah, in my view, like there are a lot of people who have fake degrees and got a job and make a living out of it. That doesn't mean that I could recommend that, right? Right. So Ponzi schemes are like a fake degree you have. And I know a lot of people who had fake degree and got job based on fake degree and lived their whole life. So just because somebody survives that and then he says, okay, fake degree is the way to go, I cannot endorse that.
Okay, thank you.
Yeah, thank you. No problem. So just stay away from them. Stay away from them. Just like somebody can be a drug dealer and making money, and he can say, okay, you can make a lot more money. Like I'm a chemical engineer. I can be. Have you seen the serial Breaking Bad? I can be that guy and make millions, right? But I don't want to choose that. Right? It's a very obvious answer there.
Okay.
Yeah. So yeah. So here is. Uh, So real estate investment, okay, is the one which I said, and I have one slide on it. And so real estate investment, what do people say that if you are staying in a house, let's say, which can fetch a rent of like $3,000 in your lifetime, if you achieve that kind of rental from your real estate, that would be considered financially free, right? So like 3 more houses like that. So 4 homes is the target, right? So if I'm living a house which can fetch $3,000 rental, if can I can have 3 more houses, right? Then it can give me 9,000 plus I have a house to live, right? The 9,000 free cash flow from there, I can say that I am I am basically financially free. That is generally, in my view, it makes a lot of sense, because let's say you're living at a very expensive place, then you cannot have like a lot of rental properties at a cheaper place and then achieve that. So similar kind of place where you live, because where you live, your expenditure also is in that range. Uh, it also goes up, right? So what is the pros and cons here? So the positive things about rental is real estate is continuous passive incomes through rentals. You can get that. By force, it is a long-term investment. So you cannot trade it. You cannot look at it every day. Like if you buy and sell it, and buy it very quickly, it will go 1 year. And most of the time there is a sense of endowment when you if you buy a rental property, you hold it, you fall in love with it, and then it's difficult to sell. So it forces you just make a long-term decision, a long-term investment decision. Then product is always in demand. So people need houses, they need to live, right? And then there is residential demand all the time. For commercial, there may be fluctuations, but residential demand is continuous, right? The rental prices go up and down, but demand is there always. Can leverage through long-term financing, right? You can get a loan for it. You can get tax benefit or interest cost also if you are in India or in US or in Canada. I do not know what is the rule for Singapore. I think Singapore also gives that some tax benefit on that. For many people, it comes easy to handle. Okay, moral support from the family. So if somebody is going in a stock market, your family, your wife will be against you, your father would be against you, your brother would be against you. But if you are going to leverage and buy a house, they will all support you, right? So in that sense, it's good. Can diversify through various cities. So you can diversify, like if you don't want to put everything in your city, because if let's say city goes under economic downturn, then rental price, property prices fall. So diversify in going to different cities, or you can do commercial and real estate mix. There are avenues to do it. What are the problems? So especially for India, I don't think it is applicable to other. There are litigation and encroachment possibilities. So we make like it is. I think that is why I'm very much against buying any real estate in India. Now things are improving in India too, so I may look in future, but right now I do not like that. And investment is not liquid. If you have to sell it, it can take 1 year, it can take 4 years, it can take any amount of time. We do not know that. And buy sell is also effort taking. So if you buy one house, you know how much effort it takes. You have to a lot of paperwork. You need to buy, see at least 15-20 houses and make a decision, go for loan. So much paperwork around it. Is not by one click like a stocks. Do not know the actual pricing of investment, how the investment is doing, right? So actually it is a positive, but you can say that, okay, I do not know where my house price is now. I bought it for 500,000, but now I don't know where it is now, right? That there is a, you may not know unless you keep on looking at your neighbors or what price their houses got sold. So I think in Singapore and India, and now India and Canada, now there are tools like Magic Bricks in India. Here you have Zillow and all, and Singapore you have HDB price index, and then you can see the prices of latest transactions. So there is some mitigation there of this concern. And a big commission in buying and selling, and even holding can be very costly, because sometimes there are conservancy charges, there are some charges for maintenance coming from these properties, and generally it is a big ticket item, right? So even if you have to pay 20% and you finance 80%, it can be a sizable dollar value before you can make a decision to buy a house. So what should be the generally a game plan if you want to go take this route, right? So generally I will not suggest to have more than 2 EMIs at a time. And if you go by that way, so if your career starts at 0 and you have a career of like 45 years, let's say 40 or 45 years, let's say today, let's say it is retirement age is 65. So what we have to do, try to buy your first house within 5 years of your job. And if you see you are 80% leverage here, right? Sorry. And then when your leverage keeps on reducing to 50%, then you go and make second house on 80% leverage. So you have two EMIs to maintain. And when this EMI finishes, and then this EMI goes less than 50%, then you go for your third house. And then by this time, all 3 houses are free. So you are getting some rental income. And then based on that, you can go for your fourth house. And this has to be just totally on your saved money, and don't get leverage when you are at 60 or 65, right? So when you are younger, then you can use leverage on the house, but do not do that. And I don't think banks will give you loan at 65, right? Or 60-65 age. So that is the way you can. Yeah. Anybody asking question?
So Manish, I have one question. Sarah here,
Yeah.
right?
Yeah.
What's your take on maintenance, right? While we have been, the pros is all about the rental income, right? But in terms of maintenance, house maintenance, and house depreciation, right? Um, do you have any thoughts?
Yeah, it's like I am counting about free cash flow, right? So you are saying that if we buy this house, how to maintain it, or there would be maintenance costs also to be included?
Okay, so you are saying the expense is deducted. All right, got it.
Yeah. Like when we say that, okay, the cash is coming, I already am minusing off the expense. So here there is a deal here. There are two factors. So house is not a depreciating cost, right? A depreciating asset. It is a appreciating asset. The reason is because let's say that there is land involved and there is building involved. So building is depreciating, but building depreciation generally, even in books, is like 30 years, when it is like generally it should be taken 60-70 years, right? So that is depreciating. So it is depreciating at the rate of what, like 1.5 to 2% per year, right? But the land value appreciates if it is there, right? So that keeps it up. And generally you will never see that, even though, like, you, if you want to see how much is depreciation, you can see that in same neighborhood, how much is the price difference between old 25 years old house versus new house. I find generally 25-year-old houses are going higher price, because over the period of time they build amenities around it, they build a school around it, they build so many things around it, and new houses are always little far. So 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 in that sense it is appreciating asset actually, right? And if your target is to get rental income, so like the best way to do is, like, you get 4 homes, and then when you are 60-65 you are financially free. So it is taking longer, but you can achieve it faster. Also, it depends on how much you are saving and how much your salary it is. You can accelerate it. But when you are like 75 or something and you cannot manage, then try to sell more of these properties and just maintain 1 or 2 rental. Don't have like 6 or 7 properties where you have difficulty in getting the checks and you cannot reach out to the people. Those are like execution issues. Like once you do 1 or 2, then you know for others also, right?
Manish, I have a question.
Yeah.
Siva. So, um, personally, when I think about the EMI I'm going to pay for a house, uh, if let's say I just compare it paying, buying an index option, sorry, index ETF or whatever, uh, what I see is if I buy India index, any index like Nifty or Sensex, whatever these calculations, right? If I can consistently buy the index for 30 or 40 years,
Yeah.
I cannot compare that investment with real estate investment. Even comparing all the other cons you mentioned, right? It is like not liquid and not. It is a big decision. It is a very big ticket item. So, no way this can justify my thought of
Yeah, so
the
this
thought. Yeah.
strategy is not for everybody. And of course, if you compare with the equity investment and the returns from that, and like consistent return, equity will be higher than real estate all the time, right? But you know the rule of the equity, you cannot be more than 60%. If I'm 40, then I should not be more than 60% in equities, right? And some money has to go in some other asset class, right? So I would say real estate is quite a good asset class, but if you do not want that is also fine. But yeah, of course, equity would be higher rate of return than than real estate, and real estate would be more reliable than equity all the time, right?
Okay. All
Yeah.
right.
So Manish, one
Hey,
more question, right?
yeah,
Any
yeah.
pitfalls to avoid when we are if let's say somebody chooses this asset class, right? You already mentioned don't run don't run more than 2 EMI. That's one point. Are there any other pitfalls people should avoid based on what you have gone through in your life?
Oh yeah, yeah. It means like like, so even you can have 2 EMIs, right? You can have 3, 4 EMIs also. It depends on how much you can handle, right? Because you can always try to find a real estate property which can give you rental more than your EMI, so you are not worried, right? And the problem with, like, I know there are a lot of participants from India, is that in India it is difficult to achieve, because in India rental yields are very low. It's like interest rate is very high and yields are very low. But if you see, the appreciation is also very big. So there are 2, 3 factors to play. But if you are outside, if you invest outside India, it is very easy, because interest rates are lower. They are like 2.5% maybe, and then you go for like 30 years kind of thing and buy 2.5% interest rate. Your EMI will come like at like 3, 4% of the house value. And then your rental yield is like 6%. So in fact, you will not only pay your EMI, you will get some like $300, $400 free cash flow from day one, actually, right? So yeah, so I would say that the best way is to basically have buy, like, first house is of course your house, so like you should buy as soon as possible and wherever you are living. But second, third house, the investment one, you try to find the houses where you can get rental income higher than your EMI. Then you have lesser risk of getting default on this or any other thing. And I do one more thing is like, try to, like, on 1st of January, EMI of whole year, just put it one side. That's it, right? So you are not worried if suddenly the rental guy comes and say, hey, I have to vacate within a month, and then please take care of this, and I'm going. And then for 3, 4 months, if you don't have rental, still you are not worried, right? You have sufficient notice time. So yeah, and then in this, I'm already factoring in that your salary here over the years is increasing. So your ability to basically absorb the EMIs is higher. Like, so you have to see, let's say if your EMIs total is like $50,000, right? At this stage for the whole year, $50,000, right? And then your rental income is like 20,000, so 30,000 you have to come from your pocket. So your salary would be like almost at 100,000, right? So you do not exceed that 30%, not more than 30% for your EMIs for house, right? Okay, you got it. Yeah, okay. So moving to the next asset class is commodity. So commodity ETF. So a lot of people get a lot of interest in these commodity ETFs, and I have lost a lot of money in this. So I learned big lesson. So actually these commodity ETFs are supposed to track the commodity price. So like GLD is gold and this is silver. They are supposed to track the price of gold and silver. But they are not able to do so. You have to aware of a tracking error. So what is tracking error? That if ETF is actually a mutual fund actually. So what it does, it buys the contract of these things. And so how they do is like, let's say that contract of this next month expiry is going on, then maybe November and December and then January. So these contracts are lined up, but the ETF will always buy the nearest contract. So if today I put the money, my money will go to the ETF, and the ETF will buy contract expiring in the end of October, right? And then when it comes very close to the expiry, it will sell this contract and buy the expiries for November. So they will do the rollover. and rollover costs can be very high, especially in oil and natural gas ETFs. And they can make only, so there are two types of markets in ETF. One is called contango, another is called backwardation. So contango is the market where your more future side contracts are higher price than current, right? So then in contango they are going to lose money, because if let's say that my current contract I hold for oil is 75, but the November is selling at 80, then I have to sell for 75 and buy for 80. So I lost $5, right? So contango, they lose money. And backwardation is other way around, is like this let's say contract for November is selling at 80, and then December is selling at, let's say, 75, so it is lesser. So in that situation they can make money, but markets are in most of the time in contango modes. Very few times they're in backwardation mode. So that is the result. If you can see that in somewhere this time, probably this USO was started, and let's say the returns on USA, you see, they went negative, they went positive. So probably there was backwardation market and they make some money, and the oil price was also going up. So oil price was going up, but still you see the tracking error become huge, and it becomes so huge that like this is not full turn now it is even worse. And you see the difference. So if you had have just directly invest in WTI, your return would have been like 60%. This is absolute return actually. So if you invested $100, you would have got 160 by this in this 10-year period, I think. And then you would have lost a lot of money by investing in USO. Okay. So my advice, just stay away from it. So this is called tracking error. So this is called tracking error. This is in all the ETFs. So there are ETFs which follow S&P 500. There are ETFs which follow NASDAQ and all. The tracking error is always there. They start with that index, but actually over the period of time, they are not able to match because of all these costs associated with that. So for GLD, this ETF error is lesser. So in GLD, I would say, yeah, you have some chance to basically able to make as much money as GLD. So if somebody is living in kind of mental mindset that, oh, by investing in USO, I'm investing in oil. No, that's not. You are investing in oil ETF, much different and much worse than oil. So if you have a lot of money, directly trade on the oil, but I don't think you should go for commodity ETFs. Okay. Any question here?
So Manish, on the GLD, the tracking error is not this far, right?
Yeah, it's very small.
Okay.
It's very small. So GLD, the tracking error is small because gold doesn't take a lot of, like gold, it holds its value very well, and the differences in the contracts for every month, if you see, they won't be much different. And then if anyway, ETFs don't hold the gold in there. I think they buy contracts, but even if they hold the gold in there, the cost of holding gold is much lesser than cost of holding oil.
Okay, Manish,
Okay, yeah.
I'll just add something to this. Based on my experience in India, I'm just talking only about Indian context. I have done some research on specific thing. So India, some of the some of the gold ETFs have done better than the gold price, and surprisingly, the same gold mutual fund of the same ETF fund house, right? They have done better. So I don't know, something is happening. What I have observed is they usually hold about 1 to 2% of cash. Sometimes their cash is minus 2%. I don't know what they are borrowing money or something, but some magic is happening. But these fund managers, or I'm not endorsing their integrity, but I don't know, they are doing some magic. So what I've
No, it
observed
is
is,
not magic. There. So let's say that if you buy gold, right? You buy 100 kg gold, and then you are holding it, let's say, and then a rupee depreciates. Then of course in rupee you will see, okay, you are having more. You have to see in gold terms, right? So if you see your 100 kg gold is still 100 kg gold. So actually look at dollar terms, then you will see the difference. Probably it may be coming from the rupee depreciation.
yeah, one is rupee depreciation. One more is they are, my observation is they are taking advantage of the tracking error. It is intentional tracking error by
Maybe, yeah.
by using some speculations, having some
Or they may be
cushion.
trading. They may be
Yeah,
trading.
that's why they are
They may
trading
be
really,
trading.
because
Yeah,
at times I when I track, right, they still have -1% cash.
yeah,
That means they are
yeah,
literally trading, right? They
yeah,
have
yeah,
101% gold, and they have
yeah.
their balance sheet shows -1% cash. So
Mm.
what I'm trying to add value here is whatever you have shared is probably international markets, but specific to Indian markets, it is worth to consider gold ETF if you are interested to invest in gold.
Yeah, so for gold, I think if you are very much interested, if you are in Singapore, buy gold certificate from UOB. That is the cheapest way to hold gold for long term. And I think it is very safe, also very low cost also. But if you want to do trading, then of course these are the instruments, right? And for India, I think having those sovereign gold bonds is the best way in India, because it can give you like 2.5 to 3% return of just holding them, right? So you hold the gold value as well as you get 2.5%. Then you
Yeah,
return the
perfect.
certificate with the money. So that is like much better than going for mutual funds in or gold ETFs. I think gold bees in India does very well, right? Gold
Yeah,
bees is also very
that's a
good.
gold
So
bees is a ETF. That is why.
yeah,
But
Sovereign,
the
sovereign
main
bond, gold sovereign bond.
yeah,
gold
gold
sovereign,
sovereign bond is the best in my view.
yeah, the only drawback in gold sovereign bond is the liquidity issues. It's not highly liquid to trade, but I completely accept your point. It's giving extra 2.5% free money, right? So
Yeah, free
that
money,
is,
and
yeah,
over the period of 10 years, it can be a lot of money, right?
yeah, that's right.
And then you get advantage of appreciation of price of gold too,
And of
right?
course, rupee depreciation.
Yeah. No, but
Okay,
that will come in the
yeah,
gold price, right?
yeah,
Rupee
sure.
depreciation will come in gold price. Yeah.
Yeah, yeah, we can move on. Thank you.
Yeah. Yeah. So here is the very impactful chart. So now we are zooming into the other asset classes. So this chart, first time I saw is almost in like 2008 or 9. I think 2008, so somewhere around that time. And the book was called Four Pillars of Investing. And that is a very simple book and very impactful book. And at that time I was struggling with all these kind of things, which makes more money and this thing. And now if you see, this chart is in logarithmic scale, and this is inflation adjusted 200-year return in the US market. So it is not India, but it will give you a sense what is happening. So if you look at it, stocks, so it is inflation adjusted, it is real return you are talking about. So return minus inflation. If you would have invested $1 in 1802, in December 2030, to have been $1 million investment adjusted, real return. And if you would have invested in bonds, you would have made, so you see, 1 million, and where it is, 1500 only, right? So 1500x versus 1 million x, right? And this is the bills, one fifth from here, only 278. And look at gold. So what does this graph tell? Gold has delivered only on inflation over a period of 200. There were opportunities where it went like it delivered much more, and basically something happened here, let's say in 1971, where commodity inflation were very high, and then gold price skyrocketed, right? And then now it is almost at that price. It's 40 years, it did not make money. But in general, gold gives you inflation. That is what the message from the gold chart is. And the single most important from this chart is, if you keep cash in your home, you should see this, right? So in 100 years, your $1, 200 year, your $1 become less than, I think, just little over 5 cents. It is 5 cents. So 95% of loss just over 200, it is over 200 years. But if you look at here in like 30, 40 years, what happened? So this is the reason we got to invest money, because inflation is eating up your money. The cash is the worst investment ever. Some people say cash is the king. No, cash is not the king. Cash is the king only in the distress time. But like 95%, 100% of the time, cash is not the king. Cash is the one which can make you poor every day, right? So, and especially in today's time, where basically investment is your Fed interest rate is 0, and inflation is almost going to go high, and interest rate are going to go up. Cash can be the worst investment you can think of. It can straight away take away the value.
Manish, this is Srikanth
Yeah.
here.
Yeah.
This chart does not compare the real estate investment, right?
Yeah,
the
it is only
financial
tradable. Yeah, it is only tradable securities they could plot here, no real estate. Yeah.
And also here the stocks refers to any index or anything, any bunch of stocks
Yeah, I think it is S&P 500 index.
percent.
Yeah. So for more details, we can look at the source, but I think very likely it is S&P 500.
Thank you.
Manish, you have any idea about the silver?
No, I did not find that, but silver has industrial use, so it may be different than gold. Gold doesn't have gold is just insurance, so it is just insurance against inflation, insurance against the currencies. So that is why gold probably they put it here. But silver is just like copper, aluminum, and also when the demand might have been high, the price would have gone up, and then when demand is low, the price would have gone down. But it holds like a little bit of gold kind of value also. But I think in silver, we did not make any money in the last 12, 15 years. I used to remember I had a silver passport in Singapore, and I made like I think like $2,000 on that. But the cost of holding it on the passport, the silver passport was so high that I had to sell it. And okay, I said, okay, I don't want it, because every month he will cut some silver from your passport. Every month he will cut. So, but I think the price stayed same for almost 10, 12 years. Okay, so this is like when you are selecting your asset class, I always remember this chart. Very impactful chart, very impactful, and very simple also. Okay, so now relating to the single most important point from the last slide, that holding cash is very bad, and holding FDs is little less bad, but it is still bad. The reason, if you see this chart, so this is about India. So if you look at in India, this is for last 20 years almost. And here you see there are three things here: 1 year FD rate, and then consumer inflation, and then rate of actual return. Okay, so this is the inflation rate, right? And then there were FD rates going on, right? And if you see, this FD is 7.2, inflation is 5.2. So actually what we were making, you're making only 2.6%, right? So even your FD is giving 7.8, don't think it is giving you 7.8, right? It is giving you much lesser than that. And look at this period, almost 7-8 years, you are losing money on FDs. Big money was lost here. Big money was lost here. And FDs, the problem is some people think they cannot break FD. No, you can break also, right? They take it like a commitment to the God, you know. No, you can break FD, go out anytime. So there are some times where it is important to have FDs, but not all the time, right? Yeah.
Manish, one more point
Yeah.
is regarding the real rate of return. It is
Yeah.
not counting the income tax. So if you really
Yeah, it
on
is
the interest
1/3
what
tax
you
on
earn,
top of it.
yeah, on
Yeah,
top of
so
it, the real rate of return could be negative.
very well said. Yeah, I think I forgot to mention that. Yeah. So here, if it is like 6.7 you are getting today, actually there would be a TDS, it is straight away would be gone, and then you will get actually 5%. 5% minus 5% is 0, right? So you're not getting, so you probably, it may be like a whole chart you are getting negative returns. So basically, but it's still better than holding cash, right? So but I would say that FDs are not good investment unless very necessary. And when I say necessary, means like if you are like 65 years old, so have FDs for like at least next 3-4 year expenditure. And then when you're approaching 3 years and you're left for 1 year, then again do for 3-4 years. Liquidate your investment, go for FDs for some time, and then again liquidate, and then that is how you continue. Because FDs, because sometimes you may not be able to get time to liquidate your investment, so you have to do FDs at that age when you need money. So unless you absolutely, like for a 25-year old, going for FD is totally no sense. Now zooming into equity investments. So equity investing in my view is
Yeah, Manish, just a
yeah.
time check. We are about 1.5 hours past, so probably you may need to pace out your speed so that we can have more Q&A session.
Yeah, so okay, so let's go fast a little bit. If people are okay to stay longer, I don't have any problem. Okay, so if you want to do that, I am fine. I have like, for me the day is starting, right? Or we can have like another session also, or we can go ahead and move, go to the next page also.
Yeah, that is, we can leave it to that audience. It's all depends on their interest.
Okay.
We can, if the time is not really
Yeah.
enough, we can ask them for feedback for continuation. Thanks.
Okay, so equity investing, like two, short term, long term, right? So in short term, you can do derivatives, you can do stocks. In derivatives, you can do futures, options, and stocks, you can do stocks, ETFs, right? And the good thing is that like this whole zone is basically trader zone, and I don't know anything about it, so I can just escape. And this is like long term. Long-term investing can be passive investing, active investing. And passive investing is mutual funds, ETF, you already know. And active investing can be stocks and ETF. And this is investor zone. So if you are a long-term investor, like focus on these two things. And actually this becomes also a little bit passive, because ETF is some fund which you don't have any control on composition or which stock they want to keep or take out. So but a stocks is totally in your control. So understanding equity investing. So first of all, you have to understand this is the game of temperament, okay? And it is the behavior is the key thing on this, right? And lot to do with the behavior than skills or knowledge. Wisdom makes winner, intellect makes fools, okay? So smartness doesn't pay off very well in here, okay? Wisdom pays off. Equanimity within, like you have to have equanimity, right? No more if you have a lot of euphoria and that kind of thing, and then you get dull very quickly, it doesn't help at all, because then you cannot see the opportunity when it comes in the market. We are dealing with trading markets. Trading market means a volatility, and then if you cannot handle that, there is difficult to spot the opportunity. Risk versus volatility, we have to understand this fact. So there would be quite a few myth busters I'm going to use, right? So risk and volatility are not the same, right? So volatility generally comes from external factors, like each stock can go up down every day, and that may, nothing substantial may change in the stock, in the company, but the stock may be down 10-20%, right? So that is volatility actually, right? Difficult. So, and then one thing you should know about volatility is it is the greatest friend for the long-term investor, because in volatility it can give you the opportunity to buy the stock which you like, buy the stock which you value, and then if somebody is very euphoric and giving you a very good price, you can sell it. So volatility is the big friend. Just try to handle it. Risk of security can be assessed and managed, right? So now risk is a different thing. Risk you have to manage, and every investment will have risk. Don't think that FDs don't have risk. Banks go down, then you don't get the money. FDs don't have money. Like you see PAC Bank in Maharashtra, what happened, right? People have not lost money, but their money was on block for more than a year, right? So, and more volatile stock do not mean more risky stocks. Okay. So now another this thing a lot of people always talk about risk, higher the risk, higher the reward. That is not true. Okay. It is true when you are selecting your asset class, right? Like if you have real estate may be little less risky, but less reward too, right? So there is very little chance you can lose your all money in your house, because house, even if you have to do insurance for sure, but even if the market downturn, it can fall like 30-40%, but as stocks can go to zero, you can lose all your money, right? So but return also on real estate, the yields are like 7-8%, and but in stocks you can get higher returns too, right? So normally true for different asset class, when you're selecting different asset class, then this chart applies, but not for equity. For equity, it is opposite. Higher the lower the risk, higher the reward. For equity, lower the risk, higher the reward. And I can tell you why. Because risk lies within how much you know the stock. So I would say that let's say you go to buy a car, right? And then the guy say, okay, this car is $20,000. Okay, fine. But what do you know about the car? If you don't know anything about the car, it is a risky thing for you. But you do more research, then you say, okay, so it is probably Toyota can hold a lot of value, and after 5 years I will lose this much. This is my depreciation of this asset. So you know one fact. Then it is second-hand car, you don't know. Then you say, okay, can you show me if it is single driver for all 4 years? And say, yeah, okay, yeah, all single driver all 4 years. Okay, fine. Then you say, okay, can I have a test drive? You can have a test drive. So every step you're reducing the risk of losing your money, right? So you are getting the deal, like you are ensuring in $20,000 you are getting a $30,000 thing, right? That is where you're reducing the risk. And let's say that if you make it 40,000, then your risk goes down and your reward goes up, because you are paying $20,000 for a $40,000 thing, right? So first of all, your knowns are going up, and then the price you are paying, you already know. But now you are knowing the asset itself, and that is where reducing the risk. And if you are able to value this asset higher and higher and higher, then your chances of reward are going to be higher again, right? So risk goes down, rewards go up. Then you say, okay, I have a test drive, but I don't know much about the cars. And then you say, can I bring my friend and ask him to drive? And then you bring your friend who is a mechanic, and he can see everything, he can even understand the sounds and all, and then he drives the car, and then okay, then you are more satisfied. Then you know, okay, but definitely it is valued more than $20,000. Then you can further sweeten the deal, can say, hey, is it possible for you to change the tires? Tires don't seem to be brand new. And if he agrees, then you get more value out of it. So every step reducing risk and increasing our reward, right? So always keep in mind, risk can be managed, can be assessed, can be reduced, right? So lower the risk, higher the reward. Okay, second, this is like a chessboard story. Like second most important thing I think in the equity is understanding the power of compounding. So if you know the story of this chessboard, there was a guy who invented the chessboard and presented it to the king, and the king was very happy, and he said, okay, tell me what you want. And then he said, okay, I want you to put 1 grain on the first block of the check, and then double it to the next, and then double it further to the next. And you imagine what happened, the power of compounding, that by the time he reached 64th block, the king was bankrupt. On 64th square, it is 9.3 million. It is 2 million tons of grains. 2 million tons. There is no way he can fulfill that. It's like almost probably the whole earth may not have this much grain. That is what the power of compounding is, right? How do you utilize it? So first thing is, power of compounding is called the eighth miracle by Einstein. And Charlie Munger said that the first rule of compounding is to never interrupt it unnecessarily. Let it go, let it continue the way it is running. The people who time the market, they do this mistake. First of all, they don't know anything about the market, and then they try to time the market, and then they screw up this power of compounding. They don't take the benefit. Look at this table. If you have invested 100 rupees, let's say, and even if your rate of return was only 5, and then after 5 years it is 1.3 times, then after 10 years it is 1.6 times, and then after 45 years is 9 times. But look at the imagine the Indian stock market, the average rate is between 15 to 20. And if you let your compounding engine run, it would be 539 times in 40 years, right? And if you add just 20 rupees on top of it, it can be 1256 times. 1256 times for only 15% return, which is achievable. In last 40 years, Sensex has achieved more than 15% return, right? So how do we benefit most of the compounding engine? First is increase your rate of return, right? Second is increase your principal, like those 100, can you make it 200? Can you make it 300? Can you add more every year, right? Third is start early. That is the biggest key. Like if I started at the age of like 27, 28. If I would have started at the age of 25, I would have been much richer by now, right? And live longer, right? So if you go until 45, like Warren Buffett nobody would have known Warren Buffett if he would have died at 65, right? All his 99% of his money he made after the age of 50, right? Because that is where the compounding is just rocking, like every year he's making few $100 billion, right? So the last part, it is very back-ended result. So delayed gratification, you say, right? Okay. Now this thing I want to talk about, like there's a very famous quote: be fearful when others are greedy and be greedy when others are fearful. Very simple quote, everybody understand it. But tell me, why does this simple concept does not work for most of the people, right? So far, I don't know anybody other than myself who invested money in last year in March. Even bigger investors like even Rakesh Jhunjhunwala pulled out money, right? Everybody was fearful, but why they could not become greedy? And they know everybody is fearful, right? Why did not work? Can anybody say anything? Why it did not work when everybody knew that everybody is greedy, right? So it was very simple, just go and buy some stocks on that day. But why everybody did not do?
Actually, it is a fear.
Yeah,
it is a fear of losing money. And over time, they made money and they're happy with their biggest accumulation of money. And when market is falling down, and they don't want to lose it, and the fear starts
But they knew this concept, right? When others are fearful, you must be greedy, right?
Yeah, definitely. And it is something like the ethics principles we know, but while practicing it, they miss it.
Okay, got it. So that is the point.
Now myself,
Yeah,
Manish sir,
yeah.
myself, I would have imagined 2008, because when we bought when Nifty is an all-time high 6,000, we as a customer we all invested when it is corrected 10-20%, and then again it is fall down, and again it is fall down almost 2,500 it came. So I expected more downside from the Nifty. That is what I am not invested.
Okay. But did you sense that people were fearful or not? Because I remember in 2008, that time I was starting, and when Nifty fall down from 20 Sensex from 21,000 to 17,000, people were very euphoric still. They were not greedy. That is what I remember. A lot of commentators were saying, oh, it is going to go back to 35,000. Oh man, like all the TV commentary was saying that. There was very little fear. It was a lot of, still it was in greed side in my view. But in 2000, in last year, so that means like you just like say that, okay, so you had fear of going down because you experienced 2008. But I think then this concept you have to check, because that is like then this is not this concept. Then the concept is like you had bias in your mind, maybe, right? That is another behavior trap you have. So in my view, it doesn't work, because when others are fearful, you are also fearful, right? You are also very fearful. And I'm telling you, my hands were shaking in last year March. I was very fearful, because my portfolio, it became from X to 0.4x in just 10 days. Just 10 days. So 60% money was gone in that. And then I said, okay, so why I'm fearful, that means everybody may be fearful, and it is time to buy this. And then I went full blast and bought. Almost I made from 0.4x to 0.7x by buying. Almost I double whatever my portfolio was, right? So the key here is watch yourself. Watch yourself instead of watching others. If somebody is saying that I did not buy because I thought it will go down further. So this means it is not value investing. It is like you want to basically what is that called? You are still greedy. You still want to make money, so you are still in a greed, and then basically you should not invest. When you are feeling greedy, you should not invest actually, right? So here just watching yourself will help with this concept, and I think this chart would help you to see where you are. I think Siva keeps on posting this chart multiple times on the forum. So if we know ourselves, we know where we are, right? So like I would say that, and don't forget, even the big investor, they say that when they write the checks, right, their hand shakes, even with so much knowledge, so much experience, and so much this thing. But when they write the check and the hand shakes, in those deals they make a lot more money, right? So having a sense of if you are feeling greedy or fearful is very important. So that is where the basic of behavior finance come in. Okay, so now here are the few things I can quickly race through. I don't know, I think this is another concept. So some people think if the interest goes up, then the stocks go down. So look at this chart, right? So the interest rates were going down, right? The stocks were going down here. But after that, it did not happen that way. And you can imagine, like when the interest rate went down, the stock still went down in 2002, and interest rate remained very low. Stock market was just not correlated. But when they raised the interest rate so many times, I think 16 consecutive hikes they gave, but still the stock market was going up in 2004 2007, right? Because the force behind the stock market was so strong that it was taking away that headwind, right? And you see here, when the stock market start going down and they started in reducing the interest rate, it did not help at all. The force towards going down was so high that that interest rate reducing did not help at all, right? And after that, it has been low interest for long, and then the stock is like just here it is just staying and then it's going up. So there is no correlation. So the message here is interest rate is a headwind for sure, but need to see the force the market has within, right? Need to see how much it is backing it has got. Like in this time when the 2008 crisis was happening, interest rate was like not able to do anything because it was so much, it was just a crash going on. Okay, so quickly go through key things to consider. So courage and clarity are two things very much required in anything you do in life. There are two single most important thing. Clarity you can achieve, you can acquire from other people, talking to them. Courage you have to find within, right? And in a stock market, it can be another simplified term. It is called conviction, right? So a stock market makes it very simple. Have conviction. Always discuss about your mistakes more than successes, right? So always, whenever you are thinking about your success in a stock market, whatever mistake you happen, remind them. Helps you get equanimity, right? So it doesn't, when you are euphoric, think about your mistakes. When you are like very low, just think about when you made money and what happened. It helps you give courage, and then that, okay, things will not be bad forever, that kind of feeling. Employee thinking versus owner thinking. A lot of work as an employee. Then when you are evaluating the company, you think as an employee, don't think as an employee, think as an owner. Then you will see, okay, so the company has so much money, still why it is borrowing? Will I do that? Probably it is wrong decision. So management is not doing correct thing, right? That kind of thinking will come when you understand why the company, which management is good and which management is not good, right? Practice simplifying the information, concept, and strategy. Single most important in stock market, important in your day-to-day life, right? Never complicate the things. Try to simplify. Try to simplify all the time, all the time. Like you would have seen some people give the target of 456 rupees 0.25. This is my target. No, they can say to 450 also, right? But they are complicating the things. It can cost a lot if you complicate the things in your life. Always look at company level, not at share price. So always look at the company's market cap, profit, margins, whatever. Like look at a whole company, not look at current market price, EPS, PE, and all these things, right? You can divide market cap with net profit and also get the PE. But remember what is the net profit of the company. Remember what is the market cap, right? Because that will give you a sense of the business, right? Share price doesn't give any sense to that, right? Most of the financial news is just noise. Ignore it, right? There are no gurus. Market is the only guru. Market always teaches. Only the keen learners will survive the market. It is ruthless too. Is making money in a stock market is not easy. That's why I'm saying real estate investments are far more reliable, because there it is easier to make money. But in stock market is not easier. Have to be keen learner, have to stay on top of the things. Invest at least 20, spend at least 20 hours a week on a stock market things, then only you can be on top of it. Always have sense of potential upside and potential downside. So whenever you are doing an investment, make sure, okay, what is the possibility, how much money I can make, and how much money I can lose, right? I generally never go in where it is not 10:1 ratio. So if I'm buying a 100 rupee stock, within 3-4 years, I want to see that can this price, what is the current value? Okay, so current value should be at least 200, 300, and the potential should to reach at least 1,000, right? Then only I'm going to get in. Otherwise, I will not get in, because most of the stock where I go, the downside is zero. So from 100, it can go to zero. Outside then on the top side, it has to go 1,000. But if there are some stocks where I can say, oh, it cannot go down to zero, like it can go to maybe like not more than 50% lower, right? And then in my evaluation, if I see, okay, so if it is 100, it can go to like 300, 400, I can consider that. I always try to go 10:1 kind of ratio. Don't settle for less. And that is the reason why I say never short sell a stock. Never ever do that. It is the most stupid thing you can think of. The reason is there it is opposite. The upside is only 2 times, right? Maximum, that is the money you can make, right? But downside is like multiple times. Very, very difficult, very stupid thing to do. Then success is a lousy teacher. Everybody knows that success of often is not a very productive thing, but you cannot say that, hey, I want to fail here, right? So everybody has to strive for success, but when you fail, make sure you learn. Make sure you learn. In the stock market, is very important. Even in the projects also, we say, oh, where is the lesson learned? But I know nobody does lesson learned. People read lesson learned, but then nobody learns, because every project you repeat same mistake. But in the stock market, don't do that, because every time you repeat mistake, you lose your money, right? So consider it as a feast, learn the lesson. Staying focused on long-term goal has to be in paper. So patience is very key behavior you can have. Just stay focused on long-term. Don't worry about day-to-day fluctuation. Like, oh, okay, I bought this thing for 300 and now it is 350. Should I sell it? Oh, just 50,000, just 50. Oh, within 2 days, 50 rupees. No. What is your long-term? You bought it for 3,000, right? So hold it for 3,000. So from 300 to 3,000, that is the journey, right? Unless something goes wrong with the company in operating performance or in management decision, no need to sell it. Staying wealthy, the key things you need to is be disciplined. So like this is the same concept, like reaching number one is easier than staying at number one. So staying wealthy is not easy. Once you stay wealthy, then there are a lot of some people expenditures go up, right? Very quickly. Oh, I have now $5 million. Should I change my house and go to the very expensive locality? Why? What's change, right? Normally, if you know that the very wealthy people, you will not know by their living that they are wealthy. They don't show up. Show up is a stupid thing to do, right? Whatever you need, you can, like, if I need like 5-bedroom house, I will go to 5-bedroom house, right? But if I don't need just because I got money, I'm not going to switch that, right? Staying frugal is very important. And whenever you are buying the thing, just see, is it I wish or is that I need, right? Boring investment make much more money than the exciting ones. So if something is very much in the market, everybody talking about, everybody is euphoric about, very likely there is no value left, right? They will not make money. And somebody, if something is not like that, then there is a potential to make money. The strike rate, does it matter? Like if I make like 100 decisions, and if I am right on like 90 of that, does that matter? I think it may matter. It may not matter also too, because what matters is when we go right, then how much money we make in those decisions. So if I make 100 decisions, I go right on only 10, but if I make millions in that, and in 90, I just lose a few 100,000, then I would be saying, okay, so it's still okay. Still you will do well. So that is why it is called size to your conviction, right? Because where you are going right, keep on increasing your weight on those things. So how much money you made when you gone right versus loss on going wrong, that is what matters. not how many times. I can say, oh, this guy can be PM tomorrow, but do I make any money? Like in those kind of thinking, I will go right a 90% of time, but in a stock market, that doesn't work, right? In a stock market, where your mouth is like where you put your money, there you have to go right. Do not make investment which may give you sleepless night. So this is very common sense thing, right? So just don't do it, right? Humble, modest, disciplined, having equanimity and patience, these are the key behavior you have to have if you want to be good at basically investing and make a long-term wealth, not returns, wealth, big money. Okay, and this is my way of selecting stocks. It's like let's say some thought comes to mind. What do? I convert it into a theme, right? Then I go to the screener and pull a large number of stock which qualify that theme, right? Then select the criteria for selection based on the business. You have to know the business very well, basically, to see that, okay, this company A is better than company B. If you don't know the business, then it doesn't help, because like the criteria of selecting a bank would be different than criteria for selecting a construction company, right? So you have to understand how construction companies make money, how banks make money, right? Then only you can select them, and don't put too many criteria. Like, I know that when I talk to like some managers of some company and say, okay, how your business come, they will give you so much jargon and so much this thing. And for the same company, if I talk to the owner, he'll say, I look at only two things, this and this. And that guy, he owns the company, he runs it, right? So don't have the manager mindset, have the owner mindset. Like some people say that somebody reach out to Warren Buffett and he had to buy the whole company, and he said, okay, yeah, I think I understand your business, give me these 5 parameters for 5 years, that's it. And in half an hour he made the deal. So understand the business and look at what parameters you want to look, and try to simplify those. For some business, they are so simple that there may be only 2 or 3 parameters you need to see. Then what I do, I filter 5-10 companies based on that, then tighten the screen through additional parameter. I bring in some more parameter. What is the management? What is their perception in the employees? What is their how do they deal with the tax? Are there any frauds against them? And like some more thing. And then I start reading annual reports of those companies. Okay, what the management said 5-10 years back, did they do that or not, right? So how the management gets the credibility? If they cannot do, then how can I say that what he's saying now will do in future? So you have to read at least 10-year annual report and read the management and discussion section of that, right? So then you will get, so it takes time. Like generally it takes few weeks to come to make a view. But I had a lot of lessons learned that when I came to know about the company, and by the time I am doing analyzing this, and then listening to YouTube videos of the management and listening to their con calls, and then it like 2-3 weeks passed, and then the stock became like 1 time, 2 times, 3 times. So what do I do now? I create a tracking position and force myself where the tracking position is there. I try to finish those things faster and make a view on that very quickly. So now, I used to give myself 1 year view, but now I'm thinking to give it much lesser. So once I create a tracking position, within 1 year, I have to decide this stock has to get out of my portfolio or has to stay, right? So, okay, here one very important concept. I have a lot of weightage on this. When I look at the company, I think, okay, is this company under-discovered and unloved? So generally, you will not get both. Under-discovered and unloved, both you may not get, because for even to have unloved, the stock should be known to many people, right? So unloved is like Tata Motors, right? I would say it was very unloved company, like just not more than 3-4 months back, right? So, but it is not a undiscovered stock. Everybody knows about Tata Motors, right? So I like, so in bigger stocks, I like unloved, and then Normally I have a lot of undiscovered stocks, and then when I bought those companies, these were like 300 400 crore companies only, and now they are much bigger. But like at that time, I don't think many people know about it. So that is where the key is, that if nobody knows about those companies, and then if you find, and you find great deal, great bargain, and everything is good, then then when other people will find after you, you will benefit. If clear winners are, so with these filters, I find the clear winners. If the clear winners are available, I just go and buy a tracking position, monitor a couple of quarters, and then if conviction grows, I buy more, right? If that doesn't happen, exit the stock, just get out of it. If there are no clear winners and I still like it, like last year it happened in pharma companies. I had very limited knowledge on pharma companies, and then I tried to create the filters, but still I was not very sure. So I got like top 3-4 companies and got a basket buying of that, like almost equal amount of that. And over the period I monitored that. So I exited Aurobindo Pharma, and then I got Laurus and Laurus, Divi's, Aurobindo Pharma, and one more stock I bought, I think. The 4 stocks, pharma stocks I bought, I exited Aurobindo Pharma totally. So that my conviction did not grow on that. I exited, and then other 3 I'm still holding. So basket buying helps when you are not sure, but you are sure of the business, you're sure of the business environment, macro factors are very well, and then, but you're not able to zoom into one company, then probably do basket buying. Yeah, question and answer. I think, I don't know, I did not track the time. Okay. Yeah, so exactly 2 hours now.
Oh, great, Manish. So it's really a continuous 2 hour session, which is really overwhelming. And what I have seen here is there are a lot of questions in the Q&A in the poll EV.
Oh, there is. Okay, I did not look at. Okay.
So maybe what I would like to leave it to the team. If they want to continue, we can continue, or we can have just a Q&A in a separate
Where
session.
is Q&A? I can. Oh, I'm not able to see my other screen.
Yeah,
Okay.
let me share it. Let me
Yeah,
share
sure.
it.
Okay, got it.
So there are a lot of questions. So it is worth to really take more time to answer those questions. Let me share.
If people are ready to hear, stay, then I am okay to go. I can continue.
Okay, how about viewers? You want to maybe another, let's say, take 15 minutes. Can we continue for next 15 minutes? Yeah, I think not many.
Yes, sir.
Yeah, I'm okay.
All right.
Oh.
Let's yeah, Manish. Then can you see the questions, Manish?
Yeah, I can see this question. So, what is the
This is
secret
the
of
question.
achieving financial?
Yeah, this is the question, and this is the number of ratings. That means 8. It got more weightage.
Yeah, I said, right, the 4 things you have to do is increase your rate of return. Second thing is how much money you can put, principal, increase your principal, start early, and live longer. 4 things. Then only you can do. So now for each thing, it would be a lot more things to do, like increasing your return at a lot of effort. It's not easy. You spend 20 hours a week, and the knowledge will compound. So the greatest thing about stock market is like very secular thing, right? So I can tell you one thing, like for example, in my experience, just yesterday I was calculating that the money, the profit, so of course, like what is that called, profit redeemed plus the profit which is there, like unredeemed profit together, the profit I have made in a stock market in India is more than how much salary I have got from my whole career, right? And see, think about it that I studied for 12 years basic education, did my bachelor degree from one of the top university, did master's degree from NUS, another top university, full-time studying of 18 years, and then getting a job and working at least 40 hours officially and unofficially 50-60 hours a week for what, 19 years, 17 years, 17 years, right? And what that gave me, I of course I minus CPF minus tax, and what money I got is the money I made in stock market is more than that. And that is coming from 20 hours spending per week for continuously for 12 years or 13 years, maybe, right? It's very rewarding, very worthwhile doing it, right? And one more thing we have to understand, right? Like when we work for, like the way in India we are trained is not a good education actually. We are always trained to stay focused on on working for others. Like we have a mindset of just working for others. Get rid of that mindset and then look around. There are a lot more opportunities, right? I see that like last week, I think 3-4 months back, somebody put in my classmates group, oh, Tesla is opening a plant in India, and then they say, oh, this guy can get job here. Oh, can I also get the job in Tesla? Okay, I am already working for GM and I have experience. All that, so all comments were, can I get job in Tesla? But nobody is thinking, hey, can I open a canteen in Tesla? Or maybe can I have a parking outside Tesla? What about warehouse, right? Like, can I have a warehouse just a little bit nearby? Or nobody even asked where the plant is coming. At least if I can buy the land nearby, and then the price appreciation will be there, right? So that kind of mindset is very, very important, and that you can achieve when you have compounded knowledge in these things, and get rid of the mindset of just I have to do the job and working for others. Working for others is very important. It is a commitment. It is, and understanding your role and doing your role is very important. There is no doubt. But just working for others is not, right? So then only, so once you can see more opportunities, you can increase your principal, you have more knowledge, then also that will increase your principal. Start early. You can, I think everybody can. If I can achieve, everybody can achieve, right? So for me, from where the thought started in 2006 when I was working in Jacobs, I had a senior guy, and then he just it came up like he was talking about fixed deposit or something, and they said stock market, and then he's I asked him how much money you have in stock market, and he said I have 4 crore rupees. And I said, what, you have 4 crore? And that thought kept on in my mind for like 2-3 days, because I know his current salary, I know his previous salary, I know he can no way make that much money. And because before that I had so much negative perception about the stock market. Every time it is satta bazaar, it is gambler thing, and this thing or that thing, and I always considered it as a very negative thing, like staying away from the stock market people, right? So then I asked him, and then he said that like what do I, then he told what do I do? I used to buy, and then I forget, and then in 10-15 years all these things grow. And I kept on thinking that, and then so today I called him last year after like 5-10 years, and then I said to him that, hey, you are my guru, you are the only one who made me this successful, otherwise then he said, what are you talking, I never teach you anything. Right? But actually he is my guru, because he is the one who told me that this is possible, right? So understanding it is possible is very important, right? What do you, so moving to the next question, what do you think about safe investments such as fixed deposits versus high risk investments such as share? Safe investment, what do you think about safe investments such as fixed? Oh, okay. So somebody is saying fixed deposit is safe investment. No, it is not safe investment. It is also a risky investment. Just the possibility of the risk is lower. Like possibility of a bank going bankrupt is much lesser than possibility of its shares going down, right? So it is just only difference. It is the degree is different. And then another thing is in the bank, I think some money is, I think 5 lakh in India is guaranteed by the government. So if you have like 25 lakhs, 5 lakh you will still get back, and then 20 lakhs will be gone if bank goes bankrupt. But if you think that is the case, then I think you go and see the episode of Franklin Templeton for last year. I think everybody lost money and they were doing in the fixed deposit or debt funds only. It is recommended to invest in index fund ETF instead of active MF shares and shares to create wealth over long period of time. Yes, that is correct. ETFs are recommended because their cost is low and then they follow a kind of index. So definitely it is recommended. And MF and shares, no, that is not, their cost is high. But know one thing, that in India, the results are different than what is in the US. In India, many MFs are able to beat the ETFs, and how probably they may be doing trading or what they are doing, or there are very superior fund managers also. So for India, this may not hold true, because in India, many mutual funds are making much superior than indexes. Many, not one. But where in the US, it is very difficult to see some of those mutual funds. So ETFs is the way in US.
Manish, one follow-up question on the previous one, right?
Yeah.
So in US ETFs, right, especially index, what is the nominal range people can anticipate? Because you are telling in US, I mean, in India, it was 15 to 20% in stocks. You didn't mention ETF or any other, right? But you generally made that range.
Yeah. So
But
when we
for
say 15 to 20% in India, that is only on the index. Individually, you can make much more.
okay,
Right?
so similarly, right,
Yeah.
in US or in total world markets, what would be the usual? I want to have like
Yeah, US it is 10 to 12%. In Canada, it is 5 to 10%. In Singapore, it is 0.
yeah, okay.
Yeah. Any suggestion of which 5 shares will be better in this time? Yeah. You got to do your due diligence on finding the shares. There are a lot of value shares going on, but I am a long-term investor, so I can afford to buy them. Because for me, the time horizon for each stock I buy is at least 30 years, right? So the stock which I own, they are from day one, like I never sold them, right? So a lot of stocks have gone expensive, and it depends on how much you know. But you can look at Godrej Industries. I have, and recently I am buying some PSUs. Like in last year, 70-80% of my fresh money has gone in all PSUs, and hopefully they are doing okay. So and there are some property shares also going up. Yeah. So if you want, I think whoever has this question, just give me a call. That is better. There is no generic guidance on that. What percent liquid cash should I hold percent of my equity holding? This is mainly utilize my liquid money for investing in market during right opportunity to crash. So here I think I will give a like not so common answer. What do? I am always 100% and above invested, right? Which means I have always some borrowed money. And what do? I borrow more money if opportunity comes. I don't want to stay out of the market. So I don't even have 5% cash. So right now I'm at 115% invested, that means 15% is borrowed money. So so it is like borrowing is not for everyone, because it is up to you how your appetite is, and how you are borrowing. Do you have courage to sell when time comes? All those things matter on it. But there is no recommendation on what you can hold or what you don't. It is your style, right? Generally, I think mutual fund hold like 5% cash, but 5% is nothing when opportunity comes, right? When opportunity comes, you have to go big, right? So I work on, in my view, I would work on my abilities to borrow money, right? Have a what is that, that's called, like line of credit in place, have a balance transfer in place. So when opportunity comes, just go get it and then put it, because sometimes these opportunities don't come even for 5-10 years, right? Like in my view, from 2012, I was thinking that S&P will go down, go down, go down, and until 2020 did not go down, right? Because I was so much sold into that theory by this Mark Faber and Jim Rogers, that because Feds are diluting and pumping the money, the dollar will depreciate and it will kill everybody and every participant. But that did not happen, right? Because there were some other things in play which I did not see, right? Any insight into socially responsible investing that is sustainable to environment? I don't care about that. I have no problem with investing in cigarette stocks or in oil companies. I'm there for making money, and even if some company has higher ESG score, that doesn't mean that they are more economic friendly companies, right? Because they may be managing this thing, right?
Manish, one follow-up question
Yeah.
on the previous one. You talked about line of credit, right? What
Yeah.
is your safeguards when you are doing such a leverage? Do you? I mean, that served you very well so far.
So if I would have not done line of credit and balance transfer, I would have been like not even half of what I am, right? That was the biggest thing I did, because I was borrowing money at 3% from Singapore, sending it to India and making like 23 to 25% kind of return, right? And in this whole time, even if the rupee was depreciating, I still make like 10 to 12% more than what I borrowed for, right? So what I do, I have 3 or 4, and like if you need like have double the capacity of what you take, right? So if I have one line of credit and one balance transfer, I borrow the money on balance transfer, and when it comes for due, I I take on cash line and put it on balance transfer, and then balance transfer is free. Then I rotate, so it is rollover. I think quite a few people do that. So and there is like two. So what another benefit that gave me, that I had like significant money on these balance transfer, and every month they ask like 3%, right, of the balance transfer. So if you have $100,000 on a balance transfer and 3% every month, so 3,000 cash flow wise, I have to commit to that. So it forced me to save money. It forced me. I just like otherwise what happens, this money is lying, it is just getting spent. So every time, as soon as my salary will come, I will clear all these 3% bills, and then I have only like, oh, I have only 4,000 left, and that's it. And so my money, my expenditure cannot be more than 4,000. Right?
Thank you.
Yeah, thank. Can I consider house loan EMI also as savings? Yes, the house, if you are living in, so for example, what will happen? Let's say you are living in the house, and so here is like two-part answer also. When, let's say when you early part of your career, right, you are spending 30% on your rental, right, and now you convert into EMI, right? So if you buy your house, that 30%, let's say that you are living in 30,000 rupees rental house, right? And and then you buy a house which has EMI about 40,000, and there is interest cost to it. So basically 30,000 you are already given, and now you are giving 10,000 more, and then what is going to do? You are owning an asset which is appreciating over the period of time, right? So in that sense, it is a saving. Actually, it is just a cost. If you don't consider appreciation, probably it may be just cost changing and some relief of mind, right? And in my view, owning the house in which you live is very, very important, very beneficial. It is very good. It gives you a lot of freedom, and it gives you a lot of confidence too. Necessary.
Yeah, Manish, I think that's all. I think this is some looks like a typo error.
Yeah.
Yeah, I think
Okay.
that's all what we have. So it's really, really an interesting session. I hope everyone got benefited out of this. And on behalf of Valam team, I thank Manish for his valuable time and sharing all the his knowledge and his wisdom. I would ask or maybe one or two participants to share their insights about what they learned. Or Manish, do you have anything to say before I ask for any comments from participants?
Yeah, I think what I would say that the two things only is the first one is what would help, like having these kind of session more often, right? And like once in a month, right? And having interactive sessions where people can come and share their learning. So maybe you put like a 2 or 3 people as a speakers, and then other people can chime in, right? Because if you just call everybody and then say, okay, everybody can speak their mind, but nobody will say. So 2 or 3 people can be a speaker, and you give them rotate with them, and people can chime in, and so that will make us like having more, what is that called, interactive group when we are running the WhatsApp group, and people will know also each other. And after a long time, it was great to meet so many people from Singapore whom I work with, and it is a great feeling for me. And one more thing, that anybody can call me anytime. I'm very free. I can reply, I can talk to you, I can reply to your messages also, but messages require some more typing. And when you talk, the benefit is that I can also have some follow through questions, and then if I get the answer, then I can understand where you are, and then I can answer accordingly.
Yeah, thanks, Manish. Any participant willing to share or feedback or your response, quick reflections?
So Manish, I had opportunity to work with Manish and all, but after I took some time to read a few things, right? Because he inspired me to do a few things. But then in these 2 hours, I think it's worth 1 year of my reading. I should say that, and even it is more because some of the areas I did not read because it does not align with what I wanted to do. But this session, right, and it's also Manish is very honest. He just tells you what he does, right? It's not like he's telling you some articles or theory. He only tells what he did and what he worked for him. So I think that's a very great attribute of Manish, and thanks for this session.
Thank you, Sarah.
Thanks, Sarah. Is there anyone last comment?
Yeah, I would like to thank first for Shiva for introducing to the group, and as well as the right resourceful person of Mr. Manish. And really, all the things, it is from his own experience. That is what he shared. And really, I like that very much. Thank you very much for this knowledge session. Thank you.
Thank you, Amudan.
Yeah, thanks, Karnanidhi. I should thank God for introducing me to Manish or introducing Manish to me maybe about 10 years ago or something. So we had a lot of discussions and a lot of fights. I call myself as a value investor that time. I know Manish is also a value investor, but we never go along because my concepts are different and his concepts are different. But in the period of time, what I really understood is Manish is proven to be a successful investor. He has really demonstrated what he has thought, and his patience really paid, where I did not have that patience. When I recall when we bought a link pen together at the price of about 70, I know that when it was 40 to 50, we both I think I recall that we both averaged out. But as a typical investor, what I did was I sold it when it doubled. But I believe that Manish may be still holding, or I don't know. No need to.
Yeah, I sold it when it was 6 times or 7 times, but the key was not that it has become 6 times, because the business was not improving to the pace I wanted. Right, I was thinking that they were like a number 3 and they became number 2, and I was thinking them to gain market share from like 11% to like 20 to 25%, and they stayed at 11% very long for a very long time, and I was not seeing the improvement. That's why I sold it.
Yeah.
And
Anyway,
it was yeah, got it.
anyway, not to go deeper into that example, what I'm trying to say is I came to know that that some attributes of typical investors or typical market person, I need to reflect on myself and try to learn more from Manish. So that is why I'm learning more from Manish during my personal conversation with him. Thanks, Manish, for that. And I request everyone to give your feedback in the feedback form which I mentioned in the chat box. Probably if it is not accessible later, I can put this in the Valam group. Please feel free to update it. In that feedback form, I've also provided some list of future possible topics which you may be interested. So I put it there, like we strongly consider Manish's point of view. Instead of a single person talking, we can make it like a forum on a voluntary basis. Few persons can talk and discuss based on their experience. Right? Experience, I think everyone has. So we are not running out of experience. Only thing is when we share it, it will become useful knowledge. So I think I will welcome that point, Manish. We can please feel free to feedback in the feedback form. We can really synergize this effort of Valam. Thank you. Thanks all.
Thank you, Manish.
Right. Thank you.
Thank you.
Thank you.
Shiva.
Thank you. Thanks, Siva.
Thank you. It was wonderful time with
Shiva,
you
sir.
guys. Thank you very much.
Yeah, thanks, Manish.
Okay, thank you.
Yeah, thank you. Thank you all.
Thank you, Manish.
Manish, you want to stay for a few more minutes? Are you
Yeah,
available?
sure. Yeah.
Right. All right. Let us. I'll just wait for the rest of the people to get out of this room. All right.
Yeah.
Hey, all right. All around. Yeah, Manish, thanks for a very insightful thing, Manish. Yeah, personally, I feel that it is one of the mission accomplished in the Balam's group, because this was my original intention. I just want to have people idea about I mean what to do and what not to do in the financial market, right? Immediately when I went to India, that is the reason I started this when I went to India, I think about 7 years ago or something. But this is one of the important milestone in Valam Group. I would say that because I personally see that people has got a lot of insights into how they should handle money, regardless of their age and experience. Very
Yeah,
thanks for
yeah,
that.
yeah. Yeah, I think that that is what people need to know and understand themselves and invest according to them, because people like the way they feel is different than what I feel, right? So 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 understanding the basic concept and executing according to their appetite is a good thing. Yes.
Yeah.
Yeah.
So how do you feel? You feel
No, I
personally?
feel very happy with the participation. I was expecting like 10, 12 people, but actually there were like what, 25 people, right? So
Yeah.
that is good. I means right, and I know a lot of people may not have follow up immediately, but at least if even 1 or 2% can follow up, that is worth of it, right? Because
Yeah.
if one person becomes financial free, that is a big thing. It's like worth a 2 hour spending spending on it, right?
Yeah. True. True.
Yeah,
Anyway, I stopped recording. I think
yeah.
it was going on.